to talk about a very different aspect. We're going to talk about a topic that typically people do not talk about in the startup space. We're going to discuss why startups fail. I'm sure we have spoken about these things in our previous episodes as well, but primarily we're going to talk about legal steps that you need to take, financial steps that you need to take, social steps that you need to take, and how to then further go and explore and look for opportunities. Also, one very important thing, today there's some trouble with the internet. Let me put it upfront for all of you. So if you are having trouble watching, lower down your resolution so that you are able to hear and watch me clearly. All right. And of course, most importantly, as always, make sure that you like the video, subscribe to the channel, and also post your questions into the comment section. It's a fun and exciting session that I have lined up for all of you, and we'll see if the dual screen in the presentation works today or not, because as I said, there's some trouble with the internet, but I thought, why not, why should I cancel this tonight's session? So yes, of course we will be doing this. So once again, good evening everyone, and welcome to AM with DNK. Thank you for joining me on Saturday night live stream episode number 26. As I've already told you the name before, how to deal with business failures. For all those who do not know me, my name is Dilnawaz Khan. I'm the founder of Co-Design Labs and PowerDeck. Today in this session, we're going to talk about 5 broad topics around how to deal with business failures. We're going to talk about reasons of business or startup failure. We're going to talk about legal steps that you as an entrepreneur, maybe as an aspiring entrepreneur, need to take and think about if you have to get kind of wind up your business, or what happens once your startup fails, financial steps that you need to take, social steps that you need to take, because when the business fails, social conditioning, social reputation also jeopardizes, and it becomes very, very important for an entrepreneur to figure out how to move on to the next step in terms of social aspect. And last but not least, most importantly, we'll be talking about moving on to next opportunity, or moving on to the next big thing. So these are the things we're going to talk about tonight. So yes, and as always, before we jump into the session, don't forget, as I've already said, don't forget to like the video, subscribe to the channel, and if you haven't done so far, please make sure you do that and share your questions in the live chat. And also, if you want to stay connected, make sure you follow my journey on Instagram and LinkedIn. The handle is running in the ticker below. All right. So let's get started. Let me see if I can quickly share my screen, and then let's begin today's session. All right. I think we've already spoken about liking and subscribing and sharing. I have already told you about my social media channels. And of course, if you're watching it later on, if you are somebody who do not joins my live but comes and later watches it later on, make sure you drop hashtag replay in the comments so that I know you are somebody who is the replay watcher, right? So make sure you do that. And of course, if you have any questions, post the questions into the chat, and stay till the end, guys. Stay till the end, ladies and gentlemen, because we will be talking about the most important thing, Powercamp. It's a new thing that we have launched very recently. It's a 2-day live pitch deck training and financial modeling workshop. We will be talking about this particular workshop. So stay till the end. All right. All right. So let's begin. Let's begin. So the number one question, or the number one point I want to talk to all of you about today is, what is the most common thing everybody talks about in the startup incubation or startup ecosystem space? What is that one thing that everybody talks about, right? And that thing that everybody talks about, it's startup funding, right? If you look on the internet, if you look on the Economic Times, Your Story, INC42, platforms like that, you will always see that people have glorified startup funding. Everybody talks about startup funding, and in fact, to the level, and to my surprise, this is to the level that startup funding is almost equal to startup success, right? But that is not the case, and I'll tell you why. Let's look at the reality. I have got 2 examples for both for you guys, and quickly let me share the screen so that you can see. I'm sure it's a little rough out there, but I'm sure you can see what's written, right? So there was a company called Doc Talk, and this company was backed by Y Combinator, one of the most, or rather the most prestigious incubator across the world. And this company in fact raised $5 million, but they eventually shut down, right? There's another company called Tiny Owl, and I'm sure all of you would have heard about this company. They raised to a level of $28.3 million, right? Multiply by that by 7.4 crores, and you will get the amount in INR, roughly 100 plus crores. And they were backed by a giant Sequoia Capital, and even after that they failed. So let's look at the reality check, right? This is the point from where I started. This is the point that I'm trying to make, that a lot of people wherein they equate or think that startup funding is equal to success. I've given you two examples wherein the companies who were backed by biggies of the startup ecosystem and the companies who raised millions of dollars of funding even shut down. So the reality check is 90% of new startups fail, right? 75% of the venture backed startup fail, right? These are the venture backed, by technically, for all those who do not know, venture backed means the startups that have raised formal institutional money. This is either by some institutional or professional angel investor, this is by some venture capital fund, or maybe through a proper formal angel network, right? So 75% of the startups fail even after that, right? 34% of startups close within first 2 years. If you think you have kicked off your company and in 6 months you'll be able to be rich and famous, that's not the case. 34% of the companies fail in first 2 years. Just over 50% businesses make it to the fifth year, right? And only 25% of the business out of the total business that start marks or reaches up to 15th year mark. And to top it all up, and this should give you a reality check, and if not a shock at least, only 40% of startups actually turn profitable. And let me put up a disclaimer here, just for the sake of conversation. I'm going to interchangeably use the word startup and business in tonight's session in general. Otherwise, what happens that if you talk about business, if you talk about startup, they are technically two different kind of creatures. A startup is a subset of a business. A startup has special parameters and special characteristics, wherein a business is every business that people do, which is trading, product development, services, any and everything falls under the gamut of business. So tonight we're going to focus on the broader business aspect, broader sphere, and not going to talk about the startup specifically. But as I said, for the sake of convenience, I'll be interchangeably using both the words. So pardon me on that, right? So 40% of startups actually only turn profitable, right? So now there can be various reasons for business and startup failures, and I think we have kind of spoken about all these points in our previous conversation a few times, right? If you can give me a second, right? Let me open this file so that I can also check out a few quick notes. uh give me a second, guys. All right, let's ignore that. All right. So, okay. So as I said, there can be various reasons for business startup failures, and I think there's enough information available on on the internet, right? For example, this is the latest 2021 report, which says that there are multiple reasons why startup fail, right? From legal problems to operation problems to tech problems to finance to lack of product market fit, marketing problem, team problem, right? There's so many reasons why startup fail. In fact, you will find a lot of articles online. Maybe if I can remove the banners and show this to you, the top three reasons is not having the correct market need, running out of cash, and not having the right team. In fact, if you look at the report on the right, the latest report, it talks about the top 20 reasons why a business or a startup fails. Now, as I said, we're not going to talk about the business failure. We're not going to talk about the startup failure. This is not the session on how to avoid failures or what kind of failures are there and you should be prepared for that. This is primarily about what if failure happens, what after that. So in this session, we're going to primarily talk about those aspects of the entire business, right? So in fact, as I was saying, if you compare startup funding as a trend with startup failure as a trend, I have a few exciting figures for you guys, right? So if you look at the stats, right, and again, to show it to you clearly, let me kind of increase my screen to the full size. If you look at the stats, right, and this is the data from January of 2020 up till 1 year, startup funding was if you compare the word search term startup funding versus startup failure, right? They look at the difference, right? Look at the number of searches that happened around the word startup funding with the number of searches that happened around startup failure, right? And this is, and you'll be surprised to know that at least in the world 25% of the people are still searching, but if you compare the same number in India, there are lesser number of people looking at the word startup funding, sorry, failure, right? So the point I am trying to make here for all of you, the point I'm trying to make here is that a lot of people do not consider failure to be an option. And I think that is the notion, and this is the reason why I started talking about the startup funding part first, is because everybody thinks that one, funding is the ultimate success parameter. If you get funded, you are going to survive forever, which is not the case, number one. And in fact, even we as Indian entrepreneurs do not have a mindset, and because nobody talks about it, nobody wants to talk about the funding failure part, because failure is not glory, right? But most importantly, why I as an entrepreneur believe that why should we talk about startup failure? Talking about startup failure is very, very important for three main primary reasons. One, because startup failure is a harsh reality nobody talks about, and you should not just be prepared in your business that what happens. And pardon me, and don't think that I am talking about the plan B. I believe as an entrepreneur you should 100% be invested in your business. You should for sure definitely be putting all your energy into the business. You should be doing every possible thing that your business demands. I'm not talking about the plan B here, but at least I'm saying that it is good to be aware, it's good to be prepared, it's good to know what's happening around. So startup failure is a harsh reality no one talks about. Also, nobody talks about what happens once you shut down, right? It surprises me, as I've shown you in the Google trend search as well, it surprises me that how little people search about startup failures, and people consider startup failure to be something that will not happen with them, which is not the case. So also nobody talks about the startup failure or what happens after the shutdown happens. And most importantly, because of multiple stakeholders, right? Now this is where I want to kind of take a pause and elaborate a bit, right? And let me know in the chat, what do you think about this particular example that I'm giving you, and do you resonate with this? Have you ever failed in your school exam, or have you ever failed in your college exam? If you have failed in your school or college exam, give me a thumbs up, or drop a boom, or drop yes, or say I in the chat, right? And I can assure you, I'm very, very sure you would have failed, like not drastically, but at least you would have seen or faced failure. I can assure you, by the age we are in our lives, we would have failed at one point in the time or other. But the challenge with this particular thing is, when you fail in school, multiply that feeling by 10x or 100x, and that is the feeling you get when the company or the startup fails. And the most important reason is because when you fail in school or when you fail in exam, you haven't failed in life, or you haven't failed into something major, right? But when you build a startup, when you build a company, it is not just your career, your life, your money, your family at stake, but also the multiple other stakeholders that are connected with you, including your founders, co-founders, employees, investors, rather their families. So it's a pretty extended circle. So it's good to be prepared. I'm not saying you prepare to fail, but you prepare be prepared and be aware at least. So this is one of the reasons why I wanted to pick up this topic, and we should be talking about why it is important to discuss and talk about the startup failure. All right. So as I said, because multiple stakeholders are involved, right? So let me quickly share a story with all of you, and I'm sure I don't know how many of you know this about me, but I have been a failed entrepreneur myself. I have failed a company, right? I currently run two companies. I'm sure a few of you would know about them. If you don't know, let me show them to you. So I currently run two companies. One of them is called Codesign Labs. I'm sure you would have seen it a few times in our interaction. I would have mentioned them a couple of times. And I also run another company called Power Deck, right? But before these two companies, and before I doing other things that I do right now, I used to run another company called Valisco. Back in 2000, from 8 to 15, and we had to shut down that company because of multiple reasons, right? And let's not talk about the reason per se, but let's talk about the learning that I had from that failure story. So whenever I talk about failure, and this is the reason I believe my advice typically works, because as I always tell you guys who consume my content, who come and talk to me, and who even seek mentoring from me, that it is not important. The advice is not important. What is important is whether the mentor who's giving you the advice has experienced him that himself. And this is the reason why my advice is very, very practical and very, very doable, implementable. I will never give you any gyan that I have not implemented or done myself, or I have not faced that situation. So I know how difficult it is to come out of that failure, both from the financial point of view, social point of view, even from the community point of view. So there are multiple reasons why you should be aware, and this is the reason why I wanted to share the story. So what happened? See, imagine I was so I was running that company from 2008 to 15, almost 7 years. I had to shut down the company. We were in huge debt. There was a conflict between the co-founders. There was a conflict between the investor, and everything fell apart. Now that was the first time I kind of saw a failure in my life in terms of business, right? And nobody was there to guide us. And because of that experience, it took me almost roughly 1.5 2 years rather to resolve that entire thing, although I was doing something else, just to kind of keep myself occupied. But when that company failed, it literally took me 1.5 to 2 years to resolve everything in that entire duration, right? So what did I resolve? I had to resolve a lot of legality issues. I had to resolve a lot of financial issues. I had to resolve a lot of debt issues. I had to resolve a lot of client issues. I had to resolve a lot of product level issues. So you will have to technically go and give a closure to everything that you've built in past couple of years. And the older the company is, the more complex, the more difficult the closure strategy becomes, right? So the kind of advice, the point I'm going to talk to or tell you here tonight on aim with DNK is primarily my learning that happened because of my experience of failure, right? So whatever I'm going to talk to you tonight is primarily going to be, as I said, my story, my learning, and what I understood practically from the failure I saw. So the number one advice I want to give to all of you around legal and finance, right? And this is where you should be listening carefully. And if you want, you can start maybe making notes, right? And of course, this video will be on YouTube, so you can always come back and watch later. But make sure you drop the comment when you come back later and put hashtag replay so that I know you came back later on and watched the episode, right? So the first thing nobody talks about is planning, and be careful even before you begin a business. Now let me help you elaborate this particular thing. When I say you need to plan and be careful even before you begin the business, right? And this is primarily, we're going to talk about finance and legality. The biggest challenge that we faced when we shut down the company was shutting down the private limited company. The current company I run is a registered partnership firm, or technically a partnership firm, right? But the company that we were running back then was a private limited company. The general notion that is there in mind of every entrepreneur, especially the first time one, they think that registering a private limited company, or creating a private limited entity will give them a little bit of better reputation in the market, which is not the case. Customer or your client will never come to you because you have a better company name or a better entity, right? Unless your product is not great. So what happened is that when we shut down that company, right, we had to get into a lot of legal trouble and a financial trouble. So we were spending a lot of money in shutting down the company. We were signing bonds, we were signing papers, and we had to get into a lot of hassle in terms of shutting down the company. Why I'm saying that, right? It is not the fact that you will not be able to shut down the company later on as well, right? But the point I'm trying to make here is, if you are an early stage entrepreneur, if your idea has not been validated, if let us say you are into very, very early stage, do not just go and register a private limited company because you think tomorrow investor might come and give you the money, right? Typically, because see, okay, so let me help and break it for all of you who are watching me tonight, right? Or maybe especially for those who come and watch back later on, right? The uh there are typically two types of entities. One is a firm. Another type of entity is basically a company, right? A firm has more liability on the entrepreneur, but technically is less complex in terms of compliances, right? Wherein if you register a company, the company generally has got less liabilities on the entrepreneur, but is more complex to operate. Right now, in initial days, when you start a private limited company, one, you're going to lose on a lot of manpower, a lot of resources, and lot of other things from the founder side, because you just have to run the compliance and you will be paying a lot of money to the CA or any other guy who's managing a finance and compliances, right? But what if the business fails? You will be going into deeper shit in terms of compliance, because a private shutting down a private limited company is far more difficult than shutting down a firm. Now, shutdown can also happen once you get invested. I've already told you that thing, right? But that's a different thing altogether. Failure can happen at any point in time. But especially my advice is, if you are a stage company or a very very early stage company, do not get into the legality or do not get into the hassle of registering a private limited company. Now, the reason I'm pointing this out tonight in a very specific and crisp manner is because a lot of chartered accountants, if you go to them, they will advise you that you need to register a private limited company, or even a lot of entrepreneurs go with the enthusiasm that, sir, we want to raise money, therefore we want to register a private limited company. So just like failure is not sure, funding is also not sure. So initially, until unless you're not getting a deal from the investor, do not get in the hassle of a private limited company, because you might have to shut down. Therefore, you have to make sure you plan everything beforehand. Go and reach out to a mentor, go and reach out to other entrepreneurs who have registered the kind of firms and the private limited companies, and figure out everything in terms of your roadmap. The advice I want to give you, just be little more careful before you go and register the legal entity, even before you begin the process, right? So plan and be careful even before you begin your business, and this is from the legality point of view. The second point is, be clear and transparent with accounts. The biggest problem, the biggest challenge with a lot of young entrepreneurs is they are finicky in terms of spending. They do not plan things accordingly, in terms of they have random finances planned, and they are not clear with accounts. If you are an early stage entrepreneur, and I'm telling you all of these things because if you have to shut down tomorrow, you will be in deeper trouble, my friend. All right. Uh, so uh, just a second, guys. All right. So the point I'm trying to make on this particular slide is, when I say be clear with your accounts, what you need to especially do is make sure you are not, you know, doing any kind of a random activity in your accounts. Your income, your balance sheets, your accounts are clear right from day one. Because I can assure you, the day you shut down, or the day you plan to shut down, you will have to make sure your banking, accounting, everything is in place. And if that is not in place, you will be in far more deeper trouble, right? So make sure you hire somebody who understand numbers, who understand accounts, who understands or who can give you practical advice on accounting and things like that. And make sure all your accounts and all your numbers, all your finances are laid down and planned well, right? The third and the most important advice I want to give to all of you is, make sure that your dues are clear, right? So see, the point is, business need money to operate, right? You need money to run the operations, right? But a lot of times we as an entrepreneur do not take out any money from the business for ourselves, which is okay, which is fine, because a lot of times you want to give money to the business and not take it out for yourself. But we never think from the failure point of view. So there are two general advice that I give to almost every entrepreneur that I deal with, and I tell them that, one, make sure your business has some sort of a backup reserve of money, which can be used in case of something bad happens tomorrow. And it can be as stupid as maybe taking a new office, or if a laptop breaks down, or if you have to hire a new employee, you need to have some sort of extra reserve. So nobody creates a reserve or some sort of a backup in terms of finance for the business. Also, we as entrepreneurs never take out money for ourselves. That means we never ever think about our current lifestyle. I tell to all the first time entrepreneurs this thing, that if you are a first time entrepreneur, at least have a little saving in your account so that you're able to maintain the current lifestyle. If you are not able to maintain the current lifestyle while building the company, you will eventually get frustrated and you will shut down the business, because you will not be able to, you'll kind of be not in the correct zone, because when your other friends are doing better in their lives, and when you compare themselves and you are in a not in a great shape both mentally and physically, you will have this chance of giving up early, right? So my advice to you is, have some sort of a reserve for your business so that you can run your ops smoothly, which can also act as a backup in case you want to clear your dues before shutting down, and also have some sort of a personal reserve that it gives you some sort of flexibility and bandwidth. Now, this particular advice can also be uh, you know uh, uh, changed as per the business model. So let us say if you are a business to business company, making money and creating reserves for you will be simpler technically, because for a very simple reason that uh, you will be able to generate higher quantum of money per deal. Of course, the sales will be slower in a B2B kind of a nature of business. The sales is slower, but you will be able to create or get or acquire a client with a higher ticket size. Therefore, the profit margins will be better. So you will be able to create the reserves from day one, which is not the case if you are a B2C business or a D2C business, right? Which is a very different ball game. Let me give you one recent example that happened like 2 days back, or I think one day back. The Wingreens company acquired this company called Raw Pressery. I'm not sure how many of you saw that particular deal. Now the problem with that deal is that the deal was done at a valuation of 110 crore, which was a share sweep for investors from the 2018 valuation. That means the valuation that this company Raw Pressery had back in 2018, the investors had to literally share or give out their money at that valuation. Therefore, technically, the founders did not get anything, and that is broadly the news that, in the shape and form that I understood. The reason why I'm saying this is because this entire advice that you need to clear your dues, have to make sure that your business, you have a business reserve and you have a personal reserve, will also depend upon the kind of business model you follow. If you are a D2C business model, your finances will be absolutely different. If you're if you're a B2B business, your finances will be absolutely different. If you are a B2C business, your finances will be absolutely different. So broadly, consumer business has difficult finances, but the volumes, they play on the economies of scale. B2B businesses, enterprise business, have better finances in terms of they play on slow sales cycle, but a higher ticket size and higher margin, right? So the point I'm trying to make is, make sure you clear your dues, have reserves for your business, right? And a lot of you might think that what to do next, and this is the reason we are hosting this show. If you have any more questions, any questions, let me know in the chat, right? Fourth and most important thing that nobody talks about, especially I have never seen this happening in Indian startup founders, they do not have a co-founders agreement in place. And the reason why I'm telling you this is, a lot of times co-founder agreement is not made. And what is a co-founder agreement? Co-founder agreement is basically a document. It's an MOU. It's a legal contract. It can be anything that basically defines the terms and condition of engagement of two founders or three founders or four founders. And it basically defines what happens if everything goes well, what happens if things go bad, what happens if the company has to split, and any and everything around it. It's a document that basically serves as a guideline for what is going to happen if the company goes bust or good or bad or whatever, right? So you need to have a founders or co-founders agreement in place, right? I've seen a lot of startup founders not having this thing, which you need to have, right? And again, there's a detailed session I can do on how to make a founders agreement or co-founders agreement. In fact, there are a lot of YouTube videos, and this is something that can be done by very simply put by any kind of a lawyer or chartered accountant, and both of you guys both the founders need to sit across the table and decide, but you for sure need to have this thing in place. So summarizing all these 4 points together, right, as I said before I jump onto the social aspect, I think, at least in my experience, and these are the problems I personally face, these are the things I realize went bad with me when I was running a company. And these are the practical advice from my side to all of you. Number one, plan and be careful before you begin a business. Figure out, decide, create a timeline, create a goal plan, figure out whether you want to create a firm or a private limited company or not, where you want to, and when do you want to create a private limited company. If you think you want to create a private limited company because you want to have an investor, the private limited company can be built on any day or can be registered on any day. So do not go by this notion that you cannot even approach investors if you are not a private limited company. This is not a very conventional advice. Understand, my friends. Again, all those who are watching me live, all those who are going to watch later, this is not a very conventional advice. A lot of people will come and tell you that you need to have a private limited company on day one. But let me quote my example. I currently do not run a private limited company because the compliances are very, very strong. If your accounts, if your books, if your finances are clean and clear, registered partnership firm is the best thing to do. And also, government of India recognizes registered partnership firm as a startup, right? If you have to go and apply for government recognition from the Startup India, it is a viable entity. Proprietorship is not, registered partnership firm is. So do not worry about the legality part of it. You can always, with a partnership firm, build a business, make it profitable, reach out to investors, and take money. And once, of course, you have the commitment, you can convert into a private limited company. Second is, of course, as I said, be clear and transparent with accounts. Forget accounts. I see so many entrepreneurs not knowing the numbers. They don't know the basic things. They don't know the unit economics. They don't know the customer acquisition cost. They don't know the market market spend. They don't know the marketing spend. They don't know the gross profit, net profit, things like that. Business is all about numbers, my friends. If your accounts are not clean, if your accounts are not crisp, if you do not understand the numbers, either you understand it or hire somebody to do it, right? Be clear with your accounts, else the day you shut down, you will be in deep shit. Trust me on that. Third, make sure clear your dues, make sure your business has enough reserves if possible, or if you as an entrepreneur at least have some sort of a basic personal income or basic personal reserve, so that even in case of failure, you mitigate yourself, right? You will not be able to build a company without food. Trust me, right? So you need to have some sort of a reserve for yourself. And last but not least, have a co-founders agreement in place. In most of the cases, it is the vision of the founders that gets splitted, right? So make sure that you have a co-founders agreement in place. Next, I want to talk about the social aspect. But before that, I have a few comments. So thank you so much for all those who have joined me tonight. Let me quickly go through the comments. And then maybe I have one or two questions. Let me quickly pick up the questions as well. And again, folks, I'm sorry if you're having trouble on that side in terms of watching the content, because there's some internet trouble. I'm really sorry for that. But I thought I should not be canceling the session just because the internet is bad. Prakash says, hello, Prakash. Thank you for being here. Thank you, Seema. Thank you, Harshit. Seema has such a lovely comment. I am 42 years old, here for the first time. Great session. Thank you, Seema. I really appreciate you being here. And I hope it is valuable for you. You're finding value in this session. And also, this is 26th episode. So please make sure you go and watch the other episodes. We've done 25 of these sessions, and all of these sessions are really very elaborated. I make sure I provide you enough value. So make sure you watch all of them. Like the video, subscribe to the channel if you haven't done so far. I will really appreciate that. Harshit has a comment: one of the best sessions. If we think about words first, and definitely later on with experience, we got sorry, let me read once again. My bad, I'm going really fast because I want to finish. Also, because before the internet goes bad again, I want to finish tonight's session. One of the best experience, sir. Thank you so much, Harshit. If we think about words first, then definitely later on with experience, we got best at last. Absolutely, Harshit. Thinking about, there's no harm in thinking about failure. There's no harm in planning. This is one of the reasons why I always tell you guys, go and get mentors, and do not just any random startup mentor. Go and talk to people who have done it themselves. I have failed a startup myself. I know how hard it is to cope up with it. When the startup fails, you have to lose your employees, you have to lose your friendships, you have to lose your founders and co-founders, you have to lose the money, you have to lose the office, and most importantly, you have to lose the products and clients, right? And if it's a conflict case, you can't even build on top of it. So it is very, very important to think and plan about all of these things. Prakash, has you have one question about merger acquisition? Please let me see if I can answer that for you. Can you explain with some practical examples of the same for tech startups? So Prakash, see, these principles very simply can be applied for any company. Let us say if you're a tech startup, when I say if you want to kind of start the business, if you're a solo or sole founder in the pre-validation stage, or let me rather show you one, uh, you know, a video example. I did a video long back about, a few things around it. Just a second. I hope you'll be able to spot that. Give me a second, folks. Okay, if you can see my screen, there's a video that I did. This one. When should you register a legal entity, right? This is one of the videos that all of you should go and watch. Sorry. Let me zoom it for you a bit. See, this is the beauty of the live session. You can always chat and interact with people. See this one. When should you register a legal entity? So now the problem with a lot of people is they don't even know when to register a legal entity. So from the tech example point of view, and let me take the use case for you. If you are a idea stage, pre-idea, or maybe very early validation stage, you don't need to register any sort of a legal entity. Therefore, if the business fails, if you do not think of continuing into that particular sector, you can always simply on a day say I'm not doing it anymore, and there's no legal liability on top of it. If you already build a product, if you have some sort of a copyright, trademark registration and stuff like that, you might have to then figure out who takes what if you are 2 to 3 co-founders, and that thing can be governed by the co-founders agreement. If you, let us say you are two founders, one of them you is a techie, other than non-techie, the techie would say I reserve the right of the patent, so I will be taking the technology along. So all of those things will be governed by the co-founders agreement, right? And then on top of it, in terms of numbers, the moment you start having revenue, or even if you infuse some sort of money in your business, you can simply govern that using the basic company agreement, or maybe the co-founders agreement. Your question is regarding merger acquisition. Okay, great point. So, Prakash, I'll appreciate if you can elaborate the question a little bit, but as far as what I can understand from the merger and acquisition point of view, I had a point where I wanted to speak about the exit strategy as well, because a lot of times startup founders do not uh, think about exit as a strategy. In fact, this raw pressure example that I gave you is basically the right example for exit strategy. And in this case, investors thought of the exit strategy, which they did by getting acquired by another company, right? Because it is the investors' money, and rather, after a point in time, it's the major investors' money that is on stake than the entrepreneur, the founder himself. So investors then need to take a call that how will we take our money back, and how can the bigger investors kind of take the major money back out, right? So in that case, investors take a call as a board of directors. They take a call that they need to kind of either get the company acquired or acquired, or kind of get it merged into another company and take the money out, and they leave the company. So I think merger acquisition is more of a exit strategy rather than a shutdown strategy, and I think it's a pretty general evident thing. I think I've covered exit and merger in one of my videos as well, but if you think, I can have a detailed video on that session as well, right? um, I hope this kind of answers the question, Prakash. But if you want me to elaborate a little more further, I can do that. But you need to then give me a few pointers as in what your question is exactly about. If you can maybe go a little more in depth, I'll be more than happy to kind of help you out there. All right. So thank you, Mukul, for joining also. So moving on to the guy's social aspect. Now, this is a very critical part, right? Have you ever, and let me know in the comment in the chat what you think. Have you ever failed in the exam? I've already asked you this question, right? How do you feel once you fail, considering and comparing to your peers? कि दोस्त क्या कहेंगे, पेरेंट्स क्या कहेंगे, लोग क्या कहेंगे, रिश्तेदार क्या कहेंगे? These are the general things that we go through, right? Now imagine you fail in private in terms of exam. If you fail, if, let us say if you're in a 10th grade and you fail in max your father or mother or parents and relatives would know, right? But startup is a public entity. When you're building a company, it's not just your parents, but it's your, as I said, employees, your investors, your clients. Everybody would know about it. And of course, in the world of social media, where no business can survive without social media, and on a daily basis, you're talking on social media about your business, bragging big things about it. Imagine a day where you have to shut down the business. It's really tough and hard, right? So there are a couple of aspects, and again, I want to kind of talk about, and there's the mistake that I did, and I'm guilty of doing that. I think I have, in past 5 7 years, I have matured as an entrepreneur. I have developed better understanding, and I did not do this thing back then. But I would suggest, if you can do that, and I've even seen a lot of startups doing it, acknowledge that you failed, acknowledge, be transparent that you failed, and at least update your clients, your employees, and your investors and your stakeholders that why you failed. And there's a difference between acknowledging and giving excuse, right? So you socially, when it comes to accepting the defeat, accepting the failure, you should be transparent, you should be publicly able to tell that this is the reason why we failed, and this is the reason why we are shutting down the business. Because I believe, forget what people will think, these stakeholders should not be in any trouble. And that, I believe, you as an entrepreneur have the responsibility of making sure that the people who are associated do not maybe get affected in any way, right? That is the point from the social point of view. And then of course you can always go back and look for a job and things like that, right? So session takeaways, concluding today's session, right? Let me summarize all of this together for you, and maybe then you can go and build your own strategies, right? So number one, so businesses fail every day, right? If you are an entrepreneur, I can assure you, you fail on a daily basis. Every entrepreneur fails on a daily basis. Sometimes you fail a client, sometimes you fail payment, sometimes you default things, sometimes you fail your employee, sometimes your products fail, sometimes your idea fails. You as an entrepreneur fail on a daily basis, but ultimate failure is different than a everyday failure, right? A lot of people will come and say, as an entrepreneur you fail daily, but that's a very different and subjective thing. Even Jeff Bezos would fail, even Ambani would fail, but shut down a business and ultimate failure is very, very different than business, than daily micro failures, I would say, right? Second, or a project failure, right? A lot of projects fail. I have failed so many projects in this particular company, but shutting down a company and failure of a project are a different ball game altogether, right? And of course, a pivot is a different topic, different subject altogether, right? So even if you fail a business model with the current team, with the current finance, with the current company, you can always change the business model and pivot into a different direction, but not necessarily failure, right? Failure is a different ball game. There's a reason why we have to start talking about failure and at least prepare for it, right? So what should you do ultimately? Let's conclude. What should you do as a startup founder, as a business founder, as a businessman, as somebody who runs a business? What are the key things you should be doing? Number one, be aware. Keep your eyes and ears open. Be aware. Go read, learn, create a network, be at least aware what's happening in the world, and be aware about the failure. Be aware if you can see or foresee failure happening, right? Be aware about what's happening, right? Second, prepare for it. I think most of the times people do not prepare for it, right? I'm not saying, and I'm repeating, it is exactly, preparing for business failure is like taking insurance, right? You don't want to bang your car into somebody else's. You don't want to kind of jump from the 10th floor of the building. You don't want to do that as a person, right? But you always make sure that if an accident happens, you have an insurance in order to prepare for yourself. So similarly, prepare for your business, be have the documents, have the things, have other things in place, because business is an entity, business is a person, business is a long term game, right? Therefore it is very, very important. And also another reason of why I'm talking about the business failure, and rather conclude with that point, before I tell you, let me tell you the third point first. And of course, most importantly, be hopeful, right? You as an entrepreneur need to be hopeful that things will be better tomorrow. And ultimately, if this business will not work out, something else will. And this is my concluding line before I tell you another thing why I did this session, is because startups fail, businesses fail, entrepreneurs don't. If you are an entrepreneur, you will never ever fail. Your learning, your understanding, your vision will get broadened with time. Your learning, your knowledge, your skill, your awareness will be better with time. A company might fail. We have already seen Tiny Owl failing in, and now Swiggy being a billion-dollar company. We have already seen Orkut getting failed and Facebook becoming a almost like a $1 trillion company or a billion-dollar company. Nokia getting failed and now iPhone becoming a billion-dollar company. So startups will come and go. Entrepreneurs never ever fail, right? And the reason also we wanted and I want to talk about this particular topic is most importantly, in case of other things, in order to realize whether you are good at that particular thing or bad at particular thing, you can immediately find and figure out. For example, if I ask you, are you a good basketball player, all I have to do is ask you to do a layup shot or a 3 point shoot, and I can within 10 seconds tell whether you're a good basketball player or not. If I have to figure out whether you're a great singer or not, I can ask you to sing a song, and within 10 seconds I'll be able to figure out. Similarly, for guitar, for football, for coding, for any skill, it hardly takes 10 seconds. But if you are a great entrepreneur or not, if you failed as an entrepreneur just because of those 10, 20, 30, 40, 50 reasons, or you are not an entrepreneur material, that is a very, very difficult thing. And a lot of times, a lot of people who are not entrepreneurs think that they're entrepreneur. And this is the problem. And this is the issue with a lot of first time founders, especially the ones who enter into this startup game for wrong reasons like money, fame, success, and stuff like that. So, guys, understand, it's a dual-edged sword. These are two sides of the same coin. Startups fail, entrepreneurs don't. But most importantly, you have to figure out whether you are an entrepreneurial material or not. And on that note, let me quickly introduce you to something new that I'm doing this weekend, which is the next weekend, which is called Powercamp. And if you're watching this tonight, if you're watching this later on, and if you watch it tonight itself, the registration link with huge discount is on till today late night. So make sure you kind of avail that particular thing. So what is Power Camp? For next 10 seconds, be with me and I'll quickly, this is something I want to really talk about. So Power Camp is basically a 2 day live pitch deck training workshop that I'm conducting. If you don't know, as I've already shown you about the Power Deck. This is the company that I run. What we do in this particular company, we help startup create pitch decks, right? Then we further help them with raising funds, right? So under the umbrella of this company, we're doing a new product. We're launching something new, which is called Power Camp. It's a live pitch up training workshop. It is far, far, far more exhaustive with more resources, more support groups than what you saw on my YouTube channel, right? If you want to register for these 2 days, one day it's going to be pitch deck training. Second day it's going to be financial model, basically, right? So if you want to kind of avail the early bird discount, you can go on to the link in the description. The website is on Power Deck itself. So you have to go to Power Deck and click on the Power Camp if you want to check the details of the website or the details in the offerings. And the early bird discount ends tonight at 11:59 p.m. Right? So because I created this discount exclusively for the people who watch AMA and who stay till the end, right? So this is not the discount for anybody else out there. The link will not automatically expire like by 11:59. So yeah, that is the thing that I wanted to talk to all of you about at the last. And also, I am, as I promised you earlier, I am bringing in the mentor hours. And in the next session, I will also be telling you how to avail free mentor hours from my time if you think I can add some value for your business, because a lot of you keep on reaching out to me on Instagram and on LinkedIn, and I'll be more than happy to give you some sort of mentoring hours. So on that note, ladies and gentlemen, thank you so much for attending 26th episode of Aim with DNK, how to deal with startup business failures or how to deal with business failures. I am sure this was of some value to you. You enjoyed the session. If you miss on to some part, go back, come back, rewind. But before you leave, like the session, make sure you subscribe to the channel, make sure you help me spread the word about what I'm doing. And of course, if you want to learn how to make a pitch deck, and maybe one of the reasons not having enough cash is one of the reasons why startups don't survive. So if you want to learn how to make a pitch deck, if you want to know how to raise money, if you want to understand the financial model in depth, make sure you come and attend the live pitch deck training, and it will be super fun and super valuable for all of you. So yeah, that's it from my side tonight. Have a great weekend, guys, and thank you so much for joining me. And I will see you next Saturday on 27th episode of Aim with DNK. Till then, take care, have fun, bye bye, and see you next Saturday. And if you are, of course, coming into Powered Camp, I'll see you there on Friday. Thank you so much. Bye bye. Take care.